So we launched the first NASDAQ traded Bitcoin futures ETF. So that way you get exposure via futures.
Is that through Valkyrie as well? Or is that
Yeah,
a
that
different
was
vehicle?
Valkyrie.
Okay.
Yep.
All right.
And then we launched the first Bitcoin mining ETF. So it was an ETF composed of a bunch of Bitcoin mining companies.
Okay.
So that way it's sort of a proxy to Bitcoin. So we were doing these things kind of around the edges.
In the ecosystem here. Yeah, I gotcha.
And it all looked, I mean, it was all very promising.
Right.
We launched most of those in 21.
Okay.
And then that's when everything else happened. So it just just decimated the industry.
All right, everybody, we got Steven McClurg here at Treehouse Talks. Welcome, Steven.
Hey, thanks for having me, Eric.
Okay, cool, man. So this one's going to be interesting. You've had a kind of a wild, long career in a short period of time, but I always like to start with folks where they grew up. Let's start there. So why don't you tell everybody what part of the country you grew up in? We'll dive into it.
Yeah, I grew up in Longview, Texas. It's a small town in Texas, East Texas. And I grew up, visiting both my grandparents who, both sides were farmers. So I grew up a little bit more like kind of a farm life, I would say, more of like a city slicker farm life, if you want to really go that route. But no, I grew up, knowing everything from how to grow things to how to tend and then of course in the small city of Longview.
So was this a family farm, or was it like where were you learning to grow things at?
Well, so like my grandfather, for instance, he kind of ran a gentleman's farm in a little town called Avenger, Texas.
Okay.
And, I would go there and visit and hang out all week, all summer.
Cool.
And ride on his tractor.
Fun.
Yeah.
And then how did you land? Because I know you made it here to Nashville by way of California. What took you out there?
Yeah, so I went to grad school at Pepperdine.
Okay.
And that's what got me out to California. And then, of course, in grad school, getting jobs and, everything was in the area. Eventually, I got into financial services. Living in Malibu, I met a gentleman who turned out to be the CIO of Guggenheim.
Okay.
And he hired me, and
you were there for like 7 years, right?
Yeah.
All right. Well, before we get to Guggenheim, I want to go back. So, what was your first? Because you're a serial entrepreneur. You've started, co-founded a bunch of companies. Can you remember the first company that you actually, some sort of product or service you were doing where you were making money?
Yeah, I mean, probably the first thing that I was making real money in was mowing yards.
Okay.
So when I was a teenager, I would
this
go.
This is in Texas?
This is in Texas.
Okay.
East Texas, where it's hot.
I was gonna say it's nice and cool during the summer in East Texas, right? Mowing yards.
Yeah. So you got a big strong lad going around asking everybody to mow their yards. And
so were you just knocking on doors in the neighborhood?
Oh, absolutely.
And just pushing your mower up, saying, "Hey, man, your yard.
Yeah, that's right. $20 a yard.
Okay.
And that's where I made money doing that, and eventually bought my own lawnmower, and and just kind of worked that over the summers. And then my parents always wanted me to focus on school during school time. They really didn't let me work until I was a senior in high school during school hours.
Okay.
During school, but every summer I worked hard.
So when you were mowing lawns and you were building that business, was there any point in time in your head where you're like, this is what I'm going to do? I'm going to do like landscape servicing. I'm going to stay here. Or was this just like, I'm going to school, this is just my gig now?
Oh, that absolutely. I mean,
Okay.
I was sort of like, anything to make money, and then
Right.
I even had a buddy who he had like a paper route. He's, every once in a while he'd ask me to help him, him and his brother did it. And I'd get in the car on a early Sunday morning and go throw papers with him, to make a little bit of extra money too.
Okay, cool.
Yeah. So.
All right, so let's go back then. So you were at Pepperdine, and you've taught some classes there too, right? Have you done some teaching?
I did, yeah.
So we'll get to that. You run into the CIO at Guggenheim.
Mm-hmm.
Was he in school with you? Was he just in town in Malibu? You bumped into him? Like, how does that happen?
No, we went to the same church, and he's older than me, but like he was this. So I was a rugby player at Pepperdine.
Okay. Did you do undergraduate there too?
No,
Okay.
no, and but I was a rugby player, and so I loved working out. I mean, one of my favorite things to do all through college was just lifting weights.
Okay.
I discovered my favorite sport was lifting weights.
Okay. Nothing wrong with that.
Love just absolutely love training. And when I got into rugby, I mean, there's a lot of weight training involved, and it was just something I really enjoyed. Anyway, this guy was a amateur bodybuilder.
Okay.
And I thought that's what he did. I thought he was a bodybuilder.
Yeah.
And I was like, hey, dude, you're a big guy.
Okay.
Can we work out together? He's like, absolutely. You know, he was like this Gold's Gym, legitimately like the original Gold's Gym, big bodybuilder guy. Okay. And we just started training together and talking and having fun. And, I was like, I was learning finance, and I was like giving him stock, like stock advice, not knowing that he was like actually running real money.
Right. At what point in time you're like, oh, that I'm dumb. I shouldn't have been doing that.
That's
that
exactly
was weird.
Right.
Yeah.
That's exactly right.
So you guys are working out. You're in Malibu, and he offers you a job. You graduate. How do you get to Guggenheim? Like, how does that happen?
Yeah, no. He actually offered me a job 3 times before I took it. I'd never heard of Guggenheim. I thought it was a museum.
I think it is, but okay.
Yeah, there is one.
Okay.
And but I was more interested in going into investment banking, and this was more of a capital markets. And anyway, I started. The more I got to know him and other people in the industry, I realized that no, I actually do want to be in capital markets. I think that's extremely interesting.
Okay.
So there was right before the financial crisis, I was about to take a job at an investment bank, and I went to him for advice, and he said, "That's a terrible idea right now. Most banks are going to fail." And you will probably...
He saw that coming.
Oh, yeah. Yeah. He saw it coming in 2005.
Oh, wow.
Absolutely brilliant guy.
Was he shorting at all? Did he go short the housing market? Any of that stuff?
Yeah. No, he was one of the guys quietly doing it when, there's a handful of people doing it publicly.
Right.
But he was also very public about what his opinions were. I mean, I remember reading a letter that, an investor letter he wrote in 2005 about a pending housing crisis that was coming.
Wow. Okay, so you were there for 7 years, right? So you had multiple different roles, titles throughout there. What's the biggest thing that you learned while at that organization? Because it's a big shop. Like, tell me some of the big lessons that you learned that kind of set the course for the rest of the career.
Yeah, no. When I joined, it was still a pretty small shop, and not a whole lot of people had heard about it.
Okay.
So it was a good place to start. But I did everything from. I mean, I started off doing M&A. He brought me on to do M&A because he said there was going to be a lot of discounts coming in the market in 2008 and 2009.
Okay.
Which there was.
Sure.
And I want to say about a month into it, he wanted to start, they were focused in the US. They wanted to start investing outside of the US.
Mm-hmm.
And he kind of looked around the room and he's like, oh, wait. So by the way, I did some private equity in China.
Okay.
Before that. And he said, did you live in China? I said, yeah. He's like, okay, so I want you to trade emerging market bonds. I was like, I don't know anything about bonds. Yeah. and I especially don't know anything about emerging markets. He goes, you know more than anybody else here.
Okay.
Private equity in an emerging market country, you know more than most people here. And I can teach you the bond side. I can teach you the capital market side, but you know how to analyze things. So
you're sitting in the M&A seat, and then he moves you over into emerging markets. So are you like
emerging market bond trading of all things?
Sure, of course.
I've never traded a bond in my life.
Okay. So and physically, were you still in California? Or were you at New York? Where were you based out of during this?
Yeah, so this was in California. Santa Monica is where the headquarters was.
Okay.
And anyway, I was sweating, man. Like I didn't know what was about to happen. So I mean, I kind of nervously said yes. And I had no idea what I was in for. And then I went to the deputy CIO, this woman named Ann Walsh, who's good friend of mine, and she's now the CIO at Guggenheim. I was like, Ann, I don't know what I'm doing. Like, what? Like, are you going to help me? Mm-hmm. And she said, well, I've got a friend that I'm going to introduce you to. He's head of emerging market strategies at another company. He's a good friend of mine. I'll introduce you guys, and you guys can talk, and he'll mentor you.
Okay.
So that was actually a guy named Sri Kumar, who he's a famous economist. But
this seems like a very friendly environment for allowing you to grow and learn this stuff. They're just like, hey, let Steven figure that stuff out.
Well, it sounds friendly, but it was a pressure cooker. It wasn't as it was one of those things like,
You're smiling now, but back then maybe not as much.
No, not at all. Not at all. And it was probably one of the most pressure cooker environments I've ever been in.
Okay.
My boss was very famous for just being very rough and demanding.
So I'm curious. So when you're on the left coast like that, and a lot of the capital markets, a lot of, New York's kind of the center of gravity for a lot of that. And like, what time does your day start out there? Does it start at a normal time, or are you guys getting at it pretty early just to be on when the East Coast wakes up?
Oh, we started at 5 a.m.
Okay.
Now here's the interesting thing about California. A lot of people don't know this unless you're in fixed income. But when I was there, LA was the center of gravity for bonds.
Really?
Yeah.
Why was that?
So if you remember a man named Mike Milken.
Yeah, no, yeah, sure.
Yeah.
The Milken Institute.
Yeah. So Mike Milken essentially created the high yield bond market, the junk bond market. And he decided to move to Beverly Hills to do it.
Okay.
And so Beverly Hills became the center of high yield bonds. And the reason why he went out there is there were so many emerging companies in California, he wanted to access them.
Okay.
And it's all, emerging companies. So that's really what started it, was Milken. And then all the other major fixed income players started coming out of Milken. So I mentioned Sri Kumar. Sri used to work for Milken at Drexel, and he's probably the biggest name in emerging market bonds. Other people that were mentored by, my old boss was mentored by Mike Milken. A lot of people were, and then it just became the center of gravity for fixed income for a good period of time. It's not now,
okay,
but it was like that all through the 90s and early 2000s.
Okay.
Yeah.
So you're getting a crash course in all kinds of subjects that you'd never done before while you're there at Guggenheim. And then when you left Guggenheim, your next role, was that a company you started? Did you start something right after that?
No, I went and joined, I left there to join a company that was doing things in blockchain.
Okay.
This was 2016. Yeah.
Okay, so pretty early on blockchain, that wasn't anywhere near as prevalent as it is now. Wasn't, that was kind of emerging type of stuff. Because blockchain, is it 2012? Is that the genesis? Does anybody know?
Bitcoin started in 2009. It was really the first blockchain that was implemented in a real way.
Okay.
But it really didn't start becoming a thing until about 2014 through about 2016 is when blockchain technologies really started being built on.
Okay, so how did that catch your radar, blockchain technology, in this time? So you left Guggenheim to go to this company that was doing this?
Yeah.
Okay.
What I saw was the potential of blockchain technologies being a platform for financial services. For instance, trading bonds for such a period of time, when you trade bonds, you're looking at a Bloomberg screen to determine what's available, what's out there, what kind of yields are available. And then you have to physically pick up a phone and call people to trade. And that's not efficient, right? Equities had already had their moment where you can trade online via a platform. You don't really have to talk to anybody.
Right.
If you're doing big blocks, sure. But bonds was never like that. And I saw the potential of blockchain of really transforming the financial landscape and how things are done on an institutional basis. I was probably a little too early, but now it's happening in a massive way. Every major financial firm is doing something to tokenize stocks, tokenize equities, tokenize bonds, tokenize real world assets,
tokenizing mortgages.
That's all of that.
Yeah.
But there was a vision of that about 10 years ago, and I believed in it. Okay.
So you joined this group and you were there for a while. Tell me about the next gig. What happened after that?
Yeah. Well, look, I did that. I learned a lot, and I decided, what I'm really good at is asset management. I learned it at Guggenheim. I loved it. I'm good at it. And so I decided to start my own company at that point.
Okay.
And look, eventually that company got bought, but I built a asset management platform for crypto investing, and it was bought by a company called Galaxy.
Okay.
And
is that Mike Novogratz?
Mike Novogratz, yeah.
That's his Galaxy. Okay. Yeah. All right. Cool. Yeah. So he still leads that, right?
Yeah. Oh, absolutely.
Okay.
Absolutely.
Yeah. All right. So sold this company. What do you do now? You're looking around. You're like, hey, I'm jobless. I need to be employed at some point, right?
Yeah, exactly.
Yeah.
Well, the first thing I did after Galaxy was I actually joined the board of a company called 3IQ in Canada.
Okay.
They were I invested in it, joined the board, and they were trying to launch the first Bitcoin ETF in Canada.
Okay.
And they did it through another iteration called a closed-end fund, which is a publicly traded vehicle that's similar to an ETF. And I had a lot of experience managing and structuring those in the past. So I thought that I could, not only invest because they had a big vision to do that, but I could help.
Okay.
Given some of that experience. So
and this is a board seat. You're not operational.
Yeah, that's exactly right.
Okay.
Advising the CEO on the board and just kind of helping where I can. And we accomplished it. We launched the first Bitcoin ETF and first Bitcoin closed-end fund in Canada. I say we. I mean, I had a minor.
I gotcha. Yeah, sure.
But and then after that happened, I said, well, look, if that just happened in Canada, it's going to happen in the U.S. soon.
Yeah. Was that Grayscale that was the first one? Who did the first ETF here?
So actually, we were one of so there were 10 that all happened at the same time.
Okay.
The SEC held everybody up, and we all launched at the same time.
Okay.
So my company was one of the 10 that were day one.
And what was the name of that one?
Valkyrie.
That's Valkyrie.
Yeah,
okay.
Yeah, so Valkyrie. Right. So that was our goal.
So what was that? Were we 2019? When did you start Valkyrie?
So I started Valkyrie in 2020.
2020.
Like
okay.
right in time for COVID.
Yeah. Good. Awesome.
And yeah.
And so you're in LA at this time, right? You're still out West Coast. Okay. So COVID, you're California. That sounds fun.
Yeah. And we had made the decision that we were going to leave and either go to Texas or here. My wife Lori liked Nashville more. I like Dallas a little bit more because I'm a Texan.
Right. Right.
We're like that. So anyway, she won.
Obviously.
We came here. But it was a great move. I think it was the right decision.
So okay, so you start Valkyrie 2020, and then let's fast forward a couple of years. So 2021, 2022. That's when things start getting real interesting, like Celsius, FTX, all that stuff starts melting down. Did you ever meet Sam? Is it Bankman-Fried? Did you ever meet that guy?
Unfortunately, I've never met him.
Okay. Unfortunately,
I would have loved to have met him.
Yeah.
I mean, come on.
I think he was holed up in an island somewhere, wasn't he?
Yeah,
he was out there walking around in cargo shorts and flip-flops.
Yeah. Eating cucumbers. I mean, just a crazy dude.
Yeah. So I remember watching his interviews on CNBC, and you can tell he's playing a game on another TV while he's like what? He's just, what a wild dude. So that starts imploding. What does that do for your business at that time?
Well, and backing up just a little bit, when we were trying to get an ETF launched for Bitcoin, we decided that, okay, we're going to get creative and we're going to do some other proxies to Bitcoin.
Okay.
So we launched the first NASDAQ traded Bitcoin futures ETF. So that way you get exposure via futures.
Is that through Valkyrie as well? Or is that a different
that was Valkyrie.
Okay.
Yep.
All right.
And then we launched the first Bitcoin mining ETF. So it was an ETF composed of a bunch of Bitcoin mining companies.
Okay.
So that way it's sort of a proxy to Bitcoin. So we were doing these things kind of around the edges.
In the ecosystem here. Yeah, I gotcha.
And it all looked, it was all very promising.
Right.
We launched most of those in 21.
Okay.
And then that's when everything else happened. So it just just decimated the industry.
Oh yeah.
We were in the middle of raising a round. We'd had a lot of success. And then investors just pulled out before funding us, signed the documents, didn't even fund. Just walked away.
So let's get into that, because that's an oh shit moment. So you had capital allocated to the business. They've signed it. Are you sitting there thinking do I have any kind of legal recourse with these guys? Hey, you all said you were going to fund me.
Yeah.
What's going on?
Sure, we had legal recourse, but you don't sue investors.
Okay. Okay.
You sue this investor, no investor will touch you again, right?
Yeah. Good point.
You gotta be careful.
Yeah. So where's your head at? What are you thinking at this point in time?
Yeah.
The whole world's crashing
by the way, there
down.
were people that wanted us to sue, and we're like, look, we have limited resources. Do we use our resources on lawyers and get stuck in a legal battle for the next 3 years, or do we just try to focus on the business? And look, if you can avoid lawsuit, always avoid lawsuit.
Yeah, sure.
So
how big was the team at this time? How many folks did you
we
have?
had about 25 people.
Okay.
Look, we had to reduce the team. I stopped taking a salary. I was like, look, we're doing a lot of good things here. We just have to wait this out.
Yeah, you got to get through. Got to survive.
Put more of my own money in. Stop taking a salary. Had to fire people. and just cut back as many spaces as possible just to survive long enough to get through it. Now, here's the nice part. This is a great story. So this is when everything was imploding. We had investors back out. We actually found a large bank that wanted to that we found to step in and take the spot of these other investors.
Okay.
You know,
which bank was this?
I'm not going to say.
Okay.
I'm not going to say, but it's one of the top 5. You know.
Okay.
You know, and so all of a sudden, like, okay, yeah. I mean, you know, this might work out. They believe in us. They believe in the story. Like all this other stuff is kind of nonsense. And they actually invited me out to come speak at they had like an annual event. This was in November 22.
Okay.
And they were like, look, we want you to come speak at this event. We're going to make a big announcement of all, you know, the next crew of investments that we're making, particularly in blockchain. And we want you to be there for that announcement. I'm like, awesome. Great.
Yeah, cool.
The Sunday before that event is when FTX blew up.
Okay.
And I remember showing up to the event and none of the people that were like we were working with even looked me in the eye. I'm like, oh shit, I know what's going on.
That's not good.
Not good. So like that lifeline went away and we're like, okay, you know, we're just gonna have to survive a little bit longer.
Yeah, I think that's a common story. There's a lot of founders, serial entrepreneurs, you know, you start a business, you're not paying yourself anything, and then you've got ups and downs, and I think a lot of us has been there. It's like, well, you know, got to make payroll. I'm not going to be on it. Going to write a check, not receive one. So, yeah. Okay, so... And by the way, I told you this before. Valkyrie is like the coolest name.
Oh, I love that name.
It's such a cool name. So let's keep talking about the story here. So we get through the other side, and that is that we're in crypto winter now, right? That's official crypto winter. Went from the previous highs would have been, what was that back then? Did it get into the 70s, 60s? Where did
69?
69
in October of 21.
And then it got all the way down into the 20s. Did it get into the 20s?
Yeah.
Okay. Right. So we had people cut by a third or 2/3 or however you want to look at it. They got cut. So again, what the world's falling apart. Like, are you just beating the drum? Like we're doing cool things. We're just going to keep doing this. We're going to walk me through it.
I mean, look, you know, I mean, our vision was still, we wanted to launch a Bitcoin ETF, and we held on to that vision. We also focused on the products that we had that, you know, that we had launched that we believed in, even though, I mean, one of them only had like $1 million in it, but I was like, I know this is going to work out. We just have to stay the course.
Right.
You know, crypto goes through cycles every 4 years and we were in a cycle. So just got to wait another year if we can survive. And we did, we dragged it out. We survived long enough to the next year, and then the SEC started becoming constructive on Bitcoin ETFs, mainly due to the efforts of BlackRock and Grayscale. Grayscale sued the SEC, and then BlackRock kind of got involved. Now that's a blessing and a curse because now we're competing with BlackRock, right?
Yeah, sure.
But they did move the needle. They actually, this is a great story. The woman, her name is Dahlia Bloss. She's the one that wrote the famous letter basically rejecting all ETFs. She was one of the main people at the SEC.
Okay.
Well, BlackRock hired her.
Oh,
and then started working on getting
change it too. It's nice to have that kind of capital to throw around and
exactly.
We don't want to be, fighting her and that. Why don't you come over and work for us now?
yeah. And then we'll get a Bitcoin ETF once you work for us. Yeah.
Interesting how that stuff moves. So,
But that's kind of what started everything again. So we had held on to the things that we thought were really good, even though they were losing money. The products were. And then the next year, the market started going up again. Those products started reviving. We were able to start, paying ourselves a little bit again.
Talk to me about the home life in this, right? So what's happening at the house? Obviously you've got a wife, you got the boys. Like, how are you handling that stress? I mean, are you communicating with them? What's going on? Do they know what's going on? Are you kind of Are you holding this front up like everything's okay? Like how did you deal with that?
Well, I mean, look, fortunately in my previous career, I did okay. So, we had a good amount of savings. We weren't like,
eating grass and right. It's still a scary thing, though. I mean,
it's a very scary thing, right? And so we held it up. I'd have some conversations with with the family about general things, but look, I'm a Texan. We don't burden the family with that stuff.
Okay.
It's the farmer mentality. It's the Texas mentality.
Okay.
And but I do have conversations about money with the kids and the wife. So it's they're aware that like things aren't great, but they don't think that they're impoverished. So,
okay. Well, that's good to know.
Yeah.
So you come out the other side where crypto winter is thawing off. Things are getting hot. We had a high. Was that end of 24? Or was it beginning of 25? Did it get to 120s or something like that?
Yeah.
Where does that sound right? Obviously, it's another cut back from here. Walk me through what happened with Valkyrie, right?
Yeah. So look, we were in the process of launching, one of the first Bitcoin ETFs. So that really energized us. Like we had a common goal. We started just fighting for that and really pushing on marketing to grow the other things that we had, and things started turning around. It's pretty good. We got to the end, I would say, probably about 6 months before we launched it.
Okay.
Or maybe even less, maybe 4 months before we launched it. And there was another group out of Europe that had a large crypto ETF business in Europe.
Mm-hmm.
And they were kind of late to the game in the US, but wanted to get in. And the best way to do it was to buy somebody. And so we started having conversations with them. And at first we were like, oh, look, man, we finally got to the goal. We're going to do well here. But we started having conversations with them at the same time. And then I don't know if you've ever seen this in your business, but like fee compression happened, right? So when you've got 10 competitors launching the same product on the same day,
mm-hmm.
they're like, okay, how are we going to compete with each other? So people started lowering their fees even before the product got launched. And we're like, what we thought was going to be, 100 basis point fee went all the way down to 20.
Okay.
And we're like, okay, well,
changes the projections a little bit. Yeah.
And so we're like, look, it's going to be a lot harder to make money off this thing that we've been working so hard on.
You got to do a lot of volume.
Yeah, got to do a lot of volume.
Yeah.
Which is fine, but having somebody that wants to buy us, they can help with that volume is obviously a better situation.
Now, did you take any investment at Valkyrie during that time? Was this bootstrapped? How did you get through all the stuff? Was that just you and your co-founders? Like
we had revenues. We bootstrapped during that period of time. We really pushed. And but yeah, we didn't go out and seek additional investment at that point.
So you didn't have anybody breathing down your neck saying you need to sell this, Steven. You've got to get rid. Like, hey, we've invested. This is our time frame. Boom, boom, boom. This was just a decision you made. You're like,
yeah. I mean, look, our investors were, they were definitely sympathetic to selling. Right.
Okay.
They're like, yeah, no, this is great, but they weren't pushing us.
Okay.
Yeah.
Because I mean, that's, you've seen that script too, right? I know a lot of guys and they're like, yeah, they invested X amount. They want to do it for a 5-year term, a 7 or a 10-year, and they got to move the money in, move the money out, and play that game. So you guys did exit to this company. This company came in and are operating this now. And then what did you do? Did you hand them the keys? Did you hang out for a while?
Yeah, I hung out for a little bit. They wanted me to run, the U.S. side of the business, because they were European based, and I agreed to do that for a period of time while we were integrating the businesses, put them all together. But at the end of the day, the one thing that I liked doing best, it wasn't necessarily launching ETFs, it was running money. Right, it's managing money, active. So the hedge fund business was really my baby, and that was the piece they didn't want. They were a pure ETF shop.
Okay.
So what was nice about the acquisition is they handed me back the hedge fund.
You carved that piece out. Or how did that work?
Well, they bought the whole business, and then they already had a competing hedge fund, and they didn't want to have two.
Okay.
So they just basically handed it right back to me. But it was mostly my money sitting in the hedge fund anyway. So,
Okay.
Yeah.
I gotcha. And then what are you doing with that now?
Yeah. So so I continued to run that, and then when I decided to leave, I was like, okay, I'm just going to focus 100% on hedge funds and running active money, and that's when I started Canary Capital about 18 months ago.
Okay, so let's talk about Canary.
Yeah.
So you're starting with a running start, I guess, because is that what you basically converted? What was the Valkyrie hedge fund into Canary?
Mm-hmm.
Okay, all right. Well, tell me about Canary. What's the focus? What's the breadth of what you're focusing on every day? The team, the whole thing.
Yeah. No. Initially, it was that hedge fund, as a starting point, and then we just started working on filing things like XRP, Litecoin, HBAR, Solana, SWE, just to name a few of some of the larger tokens that I thought would be successful in an ETF format. So we began working on that.
So what kind of capital do you need to do something like that? Like, is that just filing for stuff? Is there additional? Do you bring attorneys in to start putting that? Like, what's that actually look like under the hood to get one of those? Vehicles together?
So my experience is a lot of like structured securities, ETFs. I could probably write the prospectus myself, but we do engage attorneys. I mean, we do a lot ourselves, and then we engage attorneys to do the final filings and file the S1s, which is what you need.
Okay.
So yeah, there's some cost there, but for us, I mean, I wanted to keep Canary a lot more simple. Just a more simple business, fewer people, focus on building revenue, not be VC backed. And so we mostly self-funded, and we decided to just get these things filed. It does cost.
Yeah.
But
so did you have a bunch of these things filed and just waiting for a change in administration to come through? So you were ready. So once they said, okay, we like this now, this is good, you were ready to roll?
Yeah, no, we had these things filed, a month or two ahead of the election.
Okay. So then once the change was made, were you first to market?
Yeah.
Wow.
So we were first to market on XRP, which was a massive.
What kind of inflows did you see once that became available to the public or institution?
$500 million.
$500 million in that month one, the first couple months?
This all happened in the first probably 2-3 months.
Okay.
Now the market has gone down, so it's not worth that anymore.
I got you.
But that's how much what the inflows were.
And are those retail investors? Is that institutional? Is it a mix?
So it's a mix. I mean, we've got retail, we've got pension funds.
I was going to ask you that. So are pension funds allowed to now invest in that as well? Because I think they had some there's always different stipulations. Like it has to be dividend paying, or is it staked or whatever. But so you've got that built in a way that they can.
Yeah. So pension funds can invest in ETFs, endowments. We've got pension funds, endowments, some financial advisors, a lot of retail.
Okay. And then is this pretty liquid? Do you see a lot of inflows, outflows? Or are you seeing money being parked?
It's mostly money being parked.
Okay.
We've seen very, very few outflows. In XRP, we've seen no outflows. It's all been inflows.
Okay.
It's just a massive demand that was built up that came in when we launched.
So let's talk a little bit more about, Bitcoin. Let's, there's one guy out there, Mr. Diamond Hands, Micro Strategies. Do you know?
I know Michael.
Michael Saylor. Yeah. So he's done some pretty interesting things recently where he's got some additional vehicles, and he's just printing money with these bonds that he's running through or through just Strategy now, that he's giving, I don't know how many, it's a lot of billions of dollars that he's got sitting on that ledger that he's paying out cash dividends monthly. What are your thoughts on that model?
Look, I think it's a really interesting structure. Utilizing your balance sheet to issue convertible debt so that you can raise more cash, or you can buy more Bitcoin. The strategy works as long as Bitcoin continues to go up in price, which I believe is going to continue to go up in price.
So you're long Bitcoin. What do you think this? If we go 2030, 2035, 2040, like what do you think long term Bitcoin? Because what's our girl that she's Kathy Wood? Kathy Wood. She tightened her long-term vision up a little bit about 3 or 4 months ago. But like, what are you thinking? Let's tell everybody.
I'm probably less bullish than everybody else is on the very long term.
Okay.
I see Bitcoin as a technology,
okay,
not just money. And I mean, look, everybody was very excited when the radio came out. Okay. Do you listen to radio anymore?
Well, I can listen to the car, but not terrestrial.
But you're not listening. Yeah, exactly.
Spotify. Yeah.
So, and then, same thing with phones. I remember when the Palm Pilot, you were able to download emails.
I had a Trio. Yeah.
I had a Trio
Palm Pilot. My little stylus popped out. And
it was awesome.
It was so much that it couldn't really compute all the things it was supposed to do, but I was like, it's going to get there.
Yeah. You could plug it into your computer, download your emails, go to lunch, answer emails, plug it back in, and they would send.
Yeah.
Brilliant technology.
Yeah.
And then the BlackBerry came along, and now nobody has BlackBerries or Trios.
Yeah, I know.
So look, Bitcoin is an amazing technology. Will it be the dominant technology for money transmission in 2030? I don't know.
Okay.
I'm on the lookout for the next thing. I actually have an interesting, I have a view that's probably a little bit more contrarian to the rest of the people that work in the ecosystem that I'm in.
Okay.
And it is the last year, Bitcoin probably didn't live up to expectations. And I'll tell you the reasons why. There's two reasons. Number one, it was an opportunity. So gold usually goes up when investors believe that inflation is coming or a recession is coming. It's not directly correlated. And usually when those two events begin to happen, then the price of gold goes down. That's exactly what's happening right now.
You've been tracking silver over the past
Silver's the same thing.
Yeah.
Silver follows gold, and then it's the first to drop as well, and it has deeper drops. This was the point of time that Bitcoin could have been that asset, and it wasn't.
Right.
Central banks didn't buy Bitcoin; they bought gold. So that shows that gold is still the dominant store of value. Bitcoin didn't quite take that narrative. The second thing is transactions. One of the things that's happened in a very dominant way in the last year is stable coins are being accepted, not just by people that use them, because we've been using them for a long time.
Stablecoin is the hot topic right now in my industry.
Massive.
Stablecoin is all the talk, and there's a lot of new companies springing up around stablecoin. I got a good buddy of mine that just founded a company in this. Yeah, it's going to be doing reversible stablecoin. So if you can send, you can actually pull back in case there's an issue or what have you. But yeah, talk to me about that. Talk to me your thoughts on this.
Look, it's interesting. It's been around for a long time.
Yeah.
Every bank wants their own. JP Morgan's building their own. Bank of New York, as far as I know, is building their own. I mean, everybody's building their own stable coin. There's some dominant ones that are already in the industry. Tether is global. It's pretty dominant. USDC is very dominant in the US. But what's happening with new legislation and the adoption of stable coins is where we thought that Bitcoin was going to be a medium of exchange globally in a digital economy. It's actually becoming stable coins now. So dollar dominance is coming back, and it's coming back via the stable coin. Yeah. So that's the other part of the narrative that's starting to break. It doesn't mean that it won't happen, that it can't come back, but it's certainly slipping to tokenization, stable coins, dollar based.
So back to my previous question then. So we know kind of where Michael Saylor's thoughts are long-term Bitcoin. We know where Kathy Wood. So, 5 years from now, is Bitcoin higher or lower than it is now?
Like 250.
So you think 250? Because I think that's where Kathy was at on her. I think she was around that 250,000.
Yeah. She was previously at $1 million.
Well, and did she pull, because of some of the things you were talking about, some of the things that should have been an absolute ratchet for it didn't materialize in the way that all the crypto heads were like, this is coming, we're printing money, we're doing, like, it's got it, it's like, well, shit, it didn't. And that's where, I used to track it a little bit closer, but grayscale to Bitcoin, and there was always this disconnect a little bit how that was working. It's like, well, how does that why is this not in lockstep with that? And then there's some other technical things that happened with it, but I think the same thing with a lot of the cryptocurrencies that were supposed to be more of a safe haven. And like you said, gold started to materialize as more where central banks are purchasing. And you can watch that on the futures market as well, what was going on there. And then, we've got a war happening. Same thing. People kind of like, ooh, what's going to happen? So it is interesting. So you're a 250 guy on that one. What else is happening in the space right now that you would say maybe you've got a contrarian view on it? What's something that a lot of people, when they're thinking about crypto space that maybe other people are bullish on, technology that you're like, I don't know about that. Anything else?
Well, one of the big ones that's been a theme for the last 10 years has been real estate tokenization.
I think it's awesome. I think mortgage, I got a buddy of mine down in Florida. He was talking about this 6 or 7 years ago, because this is still a very antiquated thing. If anybody that's bought a house recently, or not even recently, the title search and this whole thing, and it's like, this should just all be tokenized. Like, why am I paying these outlandish fees to see if you actually have the title? And it's a weird thing, right?
Yeah.
Why haven't we solved for that? That's it. Cars, same thing. Like titles for cars. Like, why isn't this on blockchain? Why isn't this on Ledger? Yeah.
Well, look, you and I both bought houses this last year. I mean, how much did we pay in title?
I don't want to talk about
and title fees.
Yeah.
I don't even know. It's like, but it was a big number.
Yeah.
I was like, wait, what is this?
Yeah. And
can you imagine that being eliminated?
Well, yeah, and it's a little bit easier on the net new house, but like when we bought this property, like it's been around a long time. Like they got to go back 100+ years. Like who, to make sure all those steps are they? Yeah, exactly. Big eye roll, big eye roll. But there's the fees. You're paying it.
Yeah. Well, somebody had previously bought it. Can't you just look back to that?
We're on the same page on that. So are you seeing some movement here on this now?
I hope that happens. I'm not personally seeing it, but I hope it happens. I think mortgages, I think title. I mean, there's so many things that could be utilized on the blockchain. The part that I'm negative on, that a lot of people think is going to be the next big thing, and have been thinking this for the last 10 years, is what we're gonna do is we're gonna take office buildings and we're gonna wrap it in a token, and that way people can share ownership and pass the ownership back and forth. I'm like, look, that first of all, that's never going to happen. Let me tell you why. If you know anything about commercial real estate, you know that the biggest, smartest players buy the best stuff, and they want to own it. They don't want to tokenize it and spread it out among a bunch of other people. They want all those economics, unless there's something they can get that's equal to their current economics. So that's where all the best properties go. The second ones are put into insurance company portfolios, because they'll hold on to those for 30 years. They don't care. And then pensions, and then you kind of go down the list, and eventually you get all, and then you have all the other stuff that's put into REITs, publicly traded REITs, which is already essentially a token. If you want to look at it that way, it's traded on NASDAQ, New York Stock Exchange. And then everything that doesn't fit into those categories are all the crappiest properties that nobody wants.
Right.
And those are the ones they're trying to tokenize. So first of all, it's like, okay, you have all the crappy properties. Second of all, where's the market for that?
Yeah.
The market is in publicly traded vehicles, like publicly traded REITs. People can go into their brokerage account and trade via, New York Stock Exchange or Schwab.
Yeah.
There's no marketplace.
Kind of feels like a little bit of going back to the housing market collapse there. You had all these tranches, and there was a bunch of junk in there that they were kind of kept reselling and redoing. So,
yeah,
that movie's been seen before too.
It has been seen, but that's what's happening right now.
Yeah.
In real estate tokenization.
So let's talk a little bit more about Canary. I'm interested, what's happening today. I know before we started, you said there was some news that's going to be coming out pretty soon. Talk to me about what's next for Canary. Tell me what's going on.
Yeah, well, so look, we've launched 5 ETFs. We're very happy with them. A lot of AUM, a lot of revenue for us, which is great for the business. We probably have about a 6 to 7 month lull where we won't be launching any more ETFs just yet, due to regulatory hurdles that we have to overcome for each one, which is fine.
No, I want to just push on that for a second. You said AUM, so you're saying assets under management. Are there different regulatory hurdles as those assets grow, or is it all one does it not matter?
No, there's a rule that the SEC adopted in August called the generic listing standards, and they essentially say, okay, here are the standards that you have to follow if you want to put any commodity, including crypto, into an ETF.
Okay.
And the main standard is it has to have a futures market. So right now there's about 15 tokens with a futures market in the US, and the ETFs that we've launched have exhausted all the ones with active futures. If we want to launch more that's in on our product slate, they have to have futures first. So that's something that we're just waiting on.
Cool.
So that's why. Yeah, that's the regulatory hurdle.
Okay. And then where do you see Canary 3 years from now? What are you doing with this business?
Yeah, so going back to what we're focused on right now is we're launching a new hedge fund that's I've actually brought in an old colleague from Guggenheim that was a portfolio manager as well, and we've developed a strategy it's a macro income strategy. So we utilize our macroeconomic views to make decisions on how much risk to have in the portfolio. So we trade bonds and crypto.
Okay.
And so, for instance, right now we're 90% bonds, 10% crypto. It's bear market, but that will shift back. And then the income side is just, derivative covered call strategies to generate income on top of the assets that we have in the portfolio. So, so yeah, that's why it's called a macro income strategy.
What areas of the market are you most bullish on right now? Where are you seeing value?
Yeah. So, well, right now, it's mostly in fixed income. That's where I'm seeing the most value. But we're getting close to the part of the curve where we're getting closer to the bottom of the market.
Okay.
So we do see some technology stocks that we have interest in. Some that are related to crypto, some that aren't. Some that are related to AI, some that are not. But we're getting close to the bottom of the market in crypto. So we'll probably start layering in crypto. And then crypto comes in various categories. I mean, I talked about Bitcoin, where I'm bullish on, but I'm not as bullish as I used to be. We're not going to see the massive, like doubling every year kind of returns. But going back to tokenization, there's about a dozen cryptocurrencies that are related to blockchains that all the tokenization is taking place on. So we're very bullish on things with real world use cases, tokenizing real world assets. So those are the tokens that we're really interested in.
Are there any companies that are really leading the way on that are out there doing that work?
Yeah. So right now, there's two prominent ones that a lot of people are talking about. One is Ripple.
Okay. Yeah. Sure.
They're doing a ton. They just launched their own stable coin. It's killing it. They're out there doing a lot of things on the financialization of blockchain. So we really like them. There's another one called Hedera. It's a different technology. It's not blockchain. It's called hash graph technology, and essentially a lot of different points of data that they can take all the data more quickly. So it's really built for enterprise solutions. So we're very bullish on that one. And then a third one is a company called Miston Labs. They have a token called SUI. It's SUI. They're the former Facebook team that were doing blockchain at Facebook. They were the ones that created Libra.
Okay.
They formed Miston Labs, and they're doing a lot of really cool things.
What's going on with Libra now? I haven't heard that in a while. Is that still a thing?
The SEC kind of shut it down. This is old SEC.
Okay.
And then they left to go form Miston Labs. But Facebook's getting back into blockchain recently.
Okay.
Yeah.
All right. Well, let's switch gears a little bit here. That's all super fascinating. I mean, it's crypto, blockchain. It's vying for oxygen, at least in my world, with artificial intelligence. Like those are the two big things. Like you go into conferences now, you're either going to go into a crypto session or you're going to an AI session. Yeah. So it's very hot topics right now. I'm curious. Couple things. If you were able to give yourself advice 20 years ago, so if you could go back and tell young Steven something, what would you tell yourself? And maybe it's just buy a bunch of Bitcoin. Maybe it's buy it at 68 cents.
Call it a day.
Yeah. But what would be some entrepreneurial business advice that you would give your younger self?
Yeah, look, I mean, obviously we talked a little bit about my background. I mean, I grew up in East Texas. I didn't know what I thought an investment banker was probably a teller, to bank.
Yeah, sure.
I didn't know.
Yeah,
I don't know if my parents even still do. And it took me a bit of a journey to realize the thing that I was really good at and that I wanted to do. I had ideas of what I wanted to do, and I had to struggle through it a little bit. It took me a little longer to get there because I just didn't know the world as much.
Yeah, sure.
Growing up in a small town. But I eventually did learn, so I don't know. I probably would have told myself that, hey, focus early on, financial services industry. Because that is really, I really do love it. I love behavioral economics. I love macroeconomics. I can go to like a dinner party and people want to like small talk about like, things that people talk about like football or whatever, and I'm just not interested. But you start talking about the economy, it's like, okay, now you got my attention, and now we can have a conversation.
Okay, so you're a big nerd.
I'm a nerd.
Got it.
Tap into your nerdiness.
Yeah. So now that you are not in East Texas and you've been around the world a few times, when you are looking at making a hire, right? So let's say you're going to bring somebody into one of your organizations. What is something that you're looking for? What is maybe a potential red flag? Maybe what is something that somebody might say where you're immediately like, there's no chance I'm hiring this person?
So this is a really weird thing, because it's probably the opposite of what advice people give other people. I don't like people that ask a lot of questions.
Okay.
I like people that have a ton of intellectual curiosity. If they have a question, they go and try to get the answer themselves first.
Yeah, it's called Google. Yeah.
That's exactly right. but I know that people give like these young kids advice to be like, yeah, ask lots of questions.
Yeah.
Like, yeah, don't ask dumb questions.
Yeah, don't ask what do you all do here?
Exactly.
We get that every once in a while. It's like, so what do you guys do? I'm like, what?
Do your research. Like, yeah. I want to see somebody that's, I mean, they don't have to come in fully prepared, but like they have to have like a strong amount of intellectual curiosity, where not only are they doing some basic research, but also answering their basic questions first, where they're having a conversation instead of just asking a bunch of questions they could have Googled.
Yeah.
I mean, that is the red flag when somebody asks me a question that could be Googled. Red flag.
What's the biggest disappointment you've had in your career regarding with people? Give me something that you're looking back, you're like, oh
man, I remember hiring this gal once. I'm obviously not going to say any names or what company, but I remember hiring this gal once that I thought was pretty smart. I thought kind of had that, but like, I mean, just couldn't do like basic things like spell check on a deck that she was preparing for me, and it was just like, oh man, like such a disappointment.
How long did she last?
Oh, like a few months.
Okay.
Yeah.
Okay. I gotcha.
Yeah, like just the basics. Like this, you should have learned this in your early in your career.
I agree with you on that. Do you have any book that you would recommend? Maybe a non-business book to somebody that is an entrepreneur or somebody that's looking at starting a business?
Really, really, really sad. I don't read many non-business books, but
okay.
But in my particular field, when people ask me, hey, what should I be reading? If I recommend a book, I recommend things like The Road to Serfdom or Thinking Fast and Slow, things that are either on the economic side or the, just, like learn your history, before you, history is very important when you're in markets. And then, but most of the reading material, when I tell people to, everybody tells kids, oh yeah, get the Wall Street Journal. I'm like, yeah, get Barron's, read Barron's cover to cover every Sunday. And then if you're a real nerd like I am, get Grant's Interest Rate Observer. It's a every 2-week publication that is super nerdy, talking about interest rates. And it sounds super boring.
That is the nerdiest thing I've ever heard in my entire life.
And I literally read it cover to cover.
You just love it. You're like, "Ooh, I can't wait."
I can't.
Wow.
I can't.
Okay. Yeah. That's funny. Let's do some rapid fire stuff here. The canary in the coal mine. Here we go. So what's one thing everyone in the crypto space is currently bullish on that you think is a total distraction? You think it's a complete waste of time?
Yeah, it's tokenization of real estate.
Okay. All right. So you're not feeling that one. Okay. What's a hill that you will die on? What is one thing like you are not going to bend on your principles on?
It's probably my libertarian slant.
Okay.
And, despite what environment we're in, whether we're in it's an administration run by liberals or conservatives, it doesn't matter. I believe in absolute freedom.
Yeah, I'm with you on that. Yeah. No, I appreciate that.
Yeah.
And then we'll wrap it up with this one. Give me a conspiracy theory that you are 100% in on right now. Give me one and there's a bunch of them, right? So we can go Bigfoot, we can go flat Earth. Give me one conspiracy theory, like, you know what? I'm actually buying in on this one.
I don't believe we've ever landed on the moon.
Yeah, I would agree with that. Why do you believe we've never landed on the moon?
Well,
because the footage is really convincing. It's really good stuff. So what?
It's the footage. I mean, I could create better footage than that in my basement, honestly. But But the fact that we stopped landing on the moon.
Well, we lost the
early...
technology. It's lost technology.
I know.
Yeah,
the aliens gave it to us and then took it away.
We had really good stuff back in the space race back in the 60s and stuff. Yeah.
Yeah. We just forgot how to do things. We forgot math. We forgot science.
I'm with you on that.
Do you believe in radiation? You'd probably, somebody had actually gone to the moon, they'd probably have radiation poisoning and be suffering right now.
It's a funny thing, and I love it. I've got some down the rabbit hole conspiracy.
Oh, we could go all day.
Oh yeah.
Conspiracy theories.
But yeah, I mean, he sends the stuff all the time. But there was a great one where it was showing all the guys before they went up, and they're like, "We're going to the moon," all this stuff, and then like their faces afterwards, they're just kind of like, it doesn't feel like they actually just did that. But there's the phone call from the moon. Just no lag, any of that stuff. So that's good. Okay, well we'll end with that. We neither of us are currently believing that we went to the moon yet. Maybe Elon will get us up there. All right, everybody. That is Steven. I'm Eric. Thank you so much for coming to Treehouse Talks.
Awesome, man. Thanks for having me.
Awesome, man. Thank you. And this is the part right here where I ask, did we record? Maybe. Okay, we got a maybe. Sometimes I just say no.
Sometimes it takes a while to download it, right?
Yeah.